Last week, I started off on a bad note and ended the week with a -1 on my trading account. Today, I will be backtesting my trades I took and rectifying my mistakes on the losses made. So stay tuned and see how I go about my trading strategy. And so for this reason, I'm actually going to go into my trades. I made a lot of mistakes last week, which I think I have to backtest. But instead of backtesting it alone, I decided to backtest it live for you guys to see. I haven't actually backtested my last week's trades, so this week I'm going to be doing that. And I want to actually be sure that the way I trade is actually the same way that I did trade when I was trading last week. But I know that I made certain mistakes, which is really one of the biggest downfall that a trader can actually get involved in if they don't put their act together, which is discipline. We have to really be very, very disciplined when it comes to trading. And for this reason, I want to share my thoughts process on how I actually go about my trades. So as you can see on the screen right here, we do have the charts right here that I always make sure to check my daily bias. The number one thing I do check is always my daily bias, and I would like to actually go through with that first. So mostly I go on the 1 hour to see how the trades are actually going. And as you can see from here, we were initially in a downtrend from this particular point here, but we ended up breaking structures and then going back into an uptrend. So telling us that this particular downtrend has been invalidated, and then uptrend has taken over. So let's look forward to what we can see in the markets. So what I do see here is that price has taken out this high and this high as well. Well, I can say this is where price started, and then this is the official break of structure. Some people will always take the wick, which is not bad. It depends on personal preference. Either ways, just make sure that you show candle bodies as a break of structure. Now, when price took out this particular high, I now know that price has overshot. Price is actually on an uptrend on the 1 hour time frame. So what am I looking for? Now I'm looking for a few conditions, which is my inducement levels. And as you can see, the lines on my chart right here shows you that I use psychological levels as part of my confirmations. Not only that, I use other confirmations as well, which you would see in my future videos. And if you have any questions about them, please make sure to type it in the comment section, and I will not have any issues responding to them with a video. Now that we have our price giving us that particular momentum to the upside, we should be expecting the next move to be going to the upside as well. So there shouldn't be any doubt that price is actually going back up. But what you did need to see is that we are caught up in a range, even though the range isn't holding for now, but it might hold in the future, which is what happened last week. I trade around 6 a.m. I'm sharing a lot of information about this strategy already. I don't mean to hide it. I just mean to sometimes probably stay private this time around. But I will make sure to share everything with the due time coming. Now, when you go to the 15-minute, you would see that price came down, created this particular inducement level, and went and then was swept by this candle, this pullback right here, and started going back to the upside. So this shows that this trade is about to go to the upside for a very long time. Now we have price pushing to the upside. What do I actually need? I would like to draw my trend lines. So I do draw my trend lines to make sure that I don't deviate from what I was actually doing. And let me bring this trend line here because it is coming from where I want it. And then I have my first trend line. So I would like to fill in my trend line with the old trend lines. But before that, let's hope price gets to around 6 a.m. in the morning on Monday. So we are exactly at 6 a.m. at this point, and we have to go to the 15-minute to look for our trace. So on the 15-minute, as you can see from here, price give us our new inducement after taking out this high. This was the inducement that we have. So that should have been the first position that I should have been looking out for. So since this is an inducement, I would like to wait for price to sweep this particular inducement and give me a reason to buy. But patience always kicks in. These types of candles can be very deceiving. As you can see, it created a very huge wick, tapping onto this other block, which my first entry was around here. I think something above there, and my stop loss was down here. As you will see if I share with you the screenshots that I have. All right. So if you talk on my screenshots, I have price. You see, this is where I took the trade, and my stop loss is just slightly below my trend line. So now let's check out this place. As you can see, the trend line came from this line. I didn't draw it close enough, but that is where it's coming from. I always draw my trend lines. I use joining trend lines. As you can see, the last touch, then I continue with the next trend line. I do hide the other trend lines as well, but that is always the case, as you can see from here. Now let's go with what I should have done. Now, as you can see, I have 18 pips stop loss here, and if I'm going to cover it up to 25 pips stop loss, which is my max stop loss, I might not even cover up to my psychological level, which isn't a right position to take. I just want to make sure that price is below my psychological level with a stop, or better still, I should have a safer place around inside of the psychological level before I can take a trade. Else, this trade will call me catching a falling knife, which you already know the consequences of catching a falling knife. Now, let's wait for price to actually give us a reason to enter. So I'm waiting for a candlestick pattern at this particular moment, and I have not seen any candlestick pattern that is valid for me to take this trade. So all I can do is wait. All right. Patience is always key. So this is where price starts to get aggressive, and this is why I think I took the trade and my stop loss was below. Bad trade, by the way. As you can all see, the stop loss was a trade was here. This was already 19 pips, and stop loss was just slightly below here, which is around 23 pips. So meaning it's not even cover up my TP with the 1:2 if I was going to take it. And as you can see, price started to go wild up and down, and this candle was so scary. And then we give our second break. Now, with the second break, what you would notice is price came to tap on this other block here. All right. I think it hasn't gotten to that place yet, but price is coming to this particular order block. Most of you might ask, why this order block? Why didn't take this order block? The reason is because this particular order block has been taken already, okay, by the first week that came in. But it was not actually valid enough for me. If I was going to take this trade, then my position could have been here, and then my stop loss would have been around this place. Then I would have targeted my 1:2 as well, and I'll be taking my trade and wouldn't have had any issues. But then I've gotten used to me taking my trades with my 1:2 and also with my candlestick patterns these days, that I really love to have my candlestick pattern before I take some trades. I used to take trades without candlestick patterns, but today I mean this time around I'm just trying to be cautious enough to be very disciplined to not take trades without actually confirming the full trend. And that is what I still can teach you. Sorry. So let's go. So this one is mitigated. So I used to have something to just map it like this to say it's mitigated, but I don't have it anymore over here. So we're just going to use something like displacement or something like that. It doesn't really matter. Okay, doesn't really matter. So we'll just delete it. Now we're waiting for this to either get tapped or something. So you can see from here, price got tapped and price reversed. So you can see this is a trade that I should have been looking out to take. Now this particular trade, if I had taken it from this place, as you can see, it is an engulfing candle, and I call it a 1 hour candle. So my stop loss would have been safe, kept here at 19 pips, or even I can put it at 20 if I wanted it to, and the target 1:2 minimum. All right. So with this 1:2, I'll be looking out for the next push to the upside. So this would have been the trade I would have taken, no drawdown at all. Even the drawdown is there, but it's quite mini. And if I had wanted to take another trade, I would have gotten another trade because price actually gave me some good setups. So from here, I will just adjust my trend line to this place because I don't like to see trend lines sweeping up and down. Now I would like to hold my position. So from this point, I will be putting my SL to break even just to make sure that the price doesn't come to take me out. And I have price giving us a break of structure at this point, telling us that we have a change of character with an inducement level left again. So price came back to take that particular inducement. Let's see how price closes, and we will possibly have a candlestick to take our second trade. So this trade would have been taken out with a break even, and let's pack that particular trade aside. So now we have our second order block, which was fully confirmed with candlestick pattern, and price came and tapped onto it. Now I want a candlestick pattern to take this particular trade, and as you can see, price has started to reject those areas. So this candlestick pattern here would have been valid again when we take that trade. And let's look at the stop loss I'll be having this time around. So I'll be having around, so if I put it below this, I'll be having 20, which isn't bad because we already have our protected order flow that is giving us a chance to actually take this trade. So I'll be targeting same highs while it's 2. And I'll be looking forward to see how price goes. So there is one technique that I will mention here. Usually what I always do is anytime you see price going up with a strong candle, you would like to wait for price to actually fill up almost 50% of the candle. So something like this, I would have been possibly staying out of the market realistically and waiting for price to, give me that particular almost 50% candle. So let's assume I was able to take the trade from here. Okay. And my stop loss will be reduced to 18. And let's see how trade goes. So you can see from that point, you see the 50% candle was filled, giving us that particular hope again that price will continue to go up. So at this point, price has actually gone into 1:1 and even more than. So I will put my SL to break even once again to protect my capital. And from here, you can see candlestick closure should alert you on when to close your trade and when not to. And you can see this is your inducement, new inducement being created. So my SL is still at break even, and I'll be protected from the trades that will get me stopped out, because I wouldn't like to actually be taken out of this trade for some reason, and I would like to close myself with small profit. But this is actually around 4 p.m. and I would like to see how price goes around this area, and I will likely close my trades if I see an engulfing candle coming to the downside. So right now we are still seeing some nice trades, and I will keep my peace. I'll not close it yet. If I see an engulfing candle, I'll be definitely closing it because I don't own the market and you can't always catch everything. So at this moment, I think I'll wait. But my human nature is I always believe price will do whatever it can to take what it has given you. So always make sure to always keep your pace. So from here, the way price is coming down, I would like to put my SL at 1%, which would be around here. I like to keep it around here to see how price actually goes. So with this, price would have nearly come to take me out. If you have huge spreads, this price will be taken out of this trade. But I might still be in. Let's see how price goes with it. Just like I mentioned, there's no engulfing candle, but the way the candlesticks are actually coming down should sometimes I'll let you take it out, or just lock your profit, put your SL at maybe 1% or something else. I have a way to take my trades that I can even put my SL at 0.5 and still be covering 1% of my trades, which I mentioned will be coming in my next videos as if that is what I can do. So from here, actually, I think I didn't mention something. Around 6, I'm supposed to be out of the market, which would have been this candle right here. Then when this candle closed, or yes, then when this candle closed, I would have been out of the market with 1.5%, because I don't hold my trades overnight, and this would have been the amount of profit I should have closed my day with, which would have been a very nice trade. And for this trend line, it will be extended for the next day's position that will be taking. So this was the first trade. Now let's go to the second trade. So we'll be going to the next day. So I'll play it forward. But as you can see, price took me out on this trade 2 times, like I mentioned. So this was the first trade that I gave you guys here. And the second trade was actually over here that I took that trade. So all these trades didn't go as planned. I got stopped out. So this was the second trade, which I should have been looking for buys, but instead I looked for sells. And you can see there was no reason for me to take this particular trade. And for that reason, I think you should always be careful of your buyers. Don't buy your buyers, but also make sure that you don't overlook certain things in your positions. So this is the first. This one of the positions that I got stopped out first. This was my first trade, and this was my second trade. All this hits my SL. And one thing about me is I used to hate criticism when I was growing up, but right now I don't see it as anything, because Forex has taught me a lot. The moment people criticizes you, it makes you build up more, because mistakes builds you up. It's not actually goodness. If you are good, why should you be building up? You know you are good already, you just relax yourself. But mistakes that you make, it builds you up. We are all humans, So this was the after trade. I think I closed it early because I knew what will happen. And this was also the after trade for the second Monday trade. And as you can see, price did go as planned. And I know this is how the trade should have been taken from this place. Should have been seen. I think I'm in a mistake here, or maybe from this candle from here. So as you can see, I pointed it and everything was related. I kind of annotated everything on my charts. I don't want this video to be long enough, but I just want to show you how I go about this. Now let's go to the next day, which was the Tuesday trade. So for all you know, as you guys know, I made mention of my inducement level being here. And as you can see, before Tuesday even reached, price has already taken out my inducement. And let's see how it goes. We are not to 6 yet. So I'll wait to 6. So I think this was 6 o'clock right here. And where would have been my order block? So I would see my order block could have been this candle, but it is actually not probably, it is actually an inside candle. So it can be given to this as well. But as you can see, this candle didn't take out the previous candle high, not to go into details. But then we have this candle that is actually around this area that acts as a kind of resistance area. I can't remember how price played out here, so we are going to do it based on how I will react. So I see this as the major order block, but you can see this particular imbalance has been filled. But so I will be looking out for candlestick confirmation around here once again to take my trade. So let's put this aside first, and I will still be looking for buys because major trend line major structure hasn't been taken from this side yet. All right, so we have this confirmation. Stop loss can be kept below around here as long as it will be safe enough. So I can take this trade from here. Since this was kind of a resistance zone, even though price managed to come back and give us a tap on the order block. So I'll have my stop loss slightly below the order block here, and I'll still target my 2%. Management is always also going to be the same as the others. You don't want to be too greedy. You also want to be a little bit, you don't want to over target your strategy. So just do a set, take it slow. And right here, I will see we have actually hit 1%, but let's see how price goes. All right, so from here, I'll put my SL to break even, and I'll be running risk-free at this moment. So my stop loss can just be at break even, and I'm targeting with my 1:2 from here onwards. So this was a Tuesday trade, and let's see how the trade played out. All this while my SL is at break even, and just like that, I was protected from this particular loss, the potential loss, by the way. So price went up in 1%, I'll say more than 1%, but then came back to hit my SL. So I would have still been in profits regardless. As you can see from here on Tuesday, I did have, was I looking for buys or something? Yes, I think so. I was looking for buys, but I didn't take the trade. The first trade here, which was this one, I didn't take it because I slept and I didn't wake up early. So I would have been taking it from here, and then my stop loss would have been lower. Now, one thing you need to understand is if I had kept my stop loss around here, I would have hit my 1:2 earlier, okay? Because that is the easiest, because you always want to target your psychological level and everything like that. I think I'm sharing a lot. There is a lot you can learn from this strategy. It's one of the simplest that you can learn. And yeah, so I'm just doing what I do in everyday basis in my trading journey. So I took the second trade here because of this candle, which wasn't supposed to be so. I was supposed to take this trade in any way. And you can see it ended up hitting my stop loss. So let's go back to this. So you can see from here, price did take out my trade. So I was out with a break even. So meaning that particular week, I would have made 1.5 and then break even. So I wouldn't have made any losses, meaning I would have taken only one trade on Monday, and I would have taken 2 trades on Monday, actually, one break even and then 1.5. This one would have been a break even. So the risk management aspect of trading is always very important. Risk break even actually helps your win rate skyrocket because it helps you know when to take a trade and when not to take a trade. Always be cautious about your risk management. And now, when price did this, all of you might think, oh yeah, price has changed direction. For me, not yet, because my major low hasn't been broken with a full body candle yet. So I'll actually be waiting to see how price reacts. So this trend line here will be invalid because it has been validated. This might still be valid, but it should need to be readjusted for it to be valid. So let's play it forward. So this is still 12:30 p.m. We still have good trades to take. So let's play price forward. And as you can see, price started to skyrocket back to the upside. If you look, there is nothing that price would have let me take this trade. But when you go back 30 minutes, I don't always do that. So there is nothing actually here for me to take this trade. Nothing at all. So I think I'll stick with 50. Now let's see how price plays out. At this point, price is just playing around. Let's see how price goes. You always want to be cautious of time as well. It hasn't taken out my low yet as well, so. All right, so at this point, we have price taking out my low, which is my major low at the moment. So then I'll be trying to switch bias, but I would like you to take out this low first. But by then, we are close to the end of the day, so there will be no trade for me again. So meaning I'll be up plus 1.5. And in the next coming days, I did actually look at my charts to see what's going on. And let's just fast forward to 6 a.m. the next day. All right, so around here we do have price, and over here how price looks messy. You want to check on the high time frame to see if there is any point of interest. You don't have to always rely on price action. So on the 1 hour, we do have a 1 hour order block. So this 1 hour order block should help us to determine what time to take this trade and what time not to. So let's go. You can see price tapped first. Let's see. Swept the low. We should see more push. Okay. And price went up and up again. So during my entry time, but I will wait. Price should give me a pullback into this. So you can see that when price was going up, price created a small pullback here. So this would be my inducement. And you can see another inducement was created. So it even makes the whole inducement area very strong enough. My order block still stands with this. I don't like trading order blocks for some reason, but I decided to just have this. I just want to put this in mind. All right, so from here, price gave us swept below this candle and then gave us 2 candles. So I would like to, if I see price pulling back a bit, I would like to take a trade from here. Stop loss being below this order block at 18 pips. I target to be 1:2 once again. But this is on Wednesday, which I didn't take any trade on Wednesday. So there's no screenshot for Wednesday for me because of the losses I made the previous day. I decided to take a little, relax a bit for myself. So that I don't actually force anything. And as you can see, the news came into and then went into my favor. Nothing went unnoticed. And what time is this? Up to 6. I think I can hold this up to 6. Yes, let's go. Price went up, went down, and then FOMC came in and did this. So with FOMC, I would have been in this trade. I might have been in this trade because of the news, and because my prof firm doesn't allow me to close positions. Realistically, I'll be out, but that's how I would have taken the trade, and TP would have been hit nicely. So let's see, because of the news, I might not have closed because FOMC, my strategy is actually scared of any news at all. And when you see price consolidating like this, bear it in mind that there will be news around. For me, I on my trading view news alert to let me know when there is news and when there is no news, to make sure that there is always, a reason to trade or not to trade the markets on that particular day. So this was a very good trade. Nice strip of inducement. Candle struck below the candle. This candle struck below the previous candle, give us a candle above, and we do have nice trade when price pushed back on this area. Stop loss just slightly below. You can keep your stop loss here and you hit your TP very, very fast. But you can sometimes, you see that from here, you can hit your TP so fast. Sometimes you can also lose both. So always make sure to put your stop loss at a very safe distance. It helps you actually maintain and have the strategy. Sorry, I'm cracking my hands. I like doing this sometimes, by the way. So let's go on Thursday. So over here, let me take this out. Over here, you realize that this order block wasn't tapped in. And since this order block wasn't tapped in, price is likely to tap into it the next day during 6 a.m. So let's take note of that. And I'll be showing you how to take these trades however you have to. All right, this is around 6. Oh, okay, it's pushed. Okay, so there is no trade around here because this whole thing is a range for me. From here to here is a range. And I have my inducement level here. This is my inducement level. And I have this whole place is also more like, let me say, liquidity for me, or I'll just say inducement area for me, very strong. There is magnets pulling this price to come around this place. So let's see what happens. There is no reason we take a trade here, honestly. So this is around 12. And perfect. So price swept below this candle, tapped on this, and then I would be having, this is 215 to 30. I will not have a problem taking it if I have other block, inducement, and then candlestick pattern. This is a candlestick pattern right here, short below that candle. It's kind of pull back. I won't have a problem taking it. 50% of the trade. Stop loss slightly below this. So I have a confirmation on check. If you check around 1:2, as always. All right, don't be greedy. SL moved to break even, and my TP would have been hit so smoothly. So this would have been a very wonderful week for me to make my profits, but unfortunately I wasn't able to capitalize on all my trades, and I just had to do what is needful. So let's always have this in mind of not giving a chance from the market. Always stay with the markets and do not leave the market for any reason. All right, so now we have new positions that can be taken the next day because it's already 6 or something. I'm speaking a lot of confirmations about this strategy already. I want to make this as a surprise to all of you. I'll be releasing it. I think we already have it. I am with my friend and we are having the strategy already. You might not see me to be who you think I am, but there's a lot going on in the background. Don't underestimate me. There is a lot of work. I am working deep work. So this was 6 a.m. on Friday, and I have my inducements here. Price didn't sweep in inducement on my end, so I'd like to take this slow. I think this was where I took my buy for the news. I took it earlier. So this is inducement created. If price comes here, this is a very strong area. I'm going to be taking my position after price sweeps. And then we get this small, this small trade right here. Stop loss can be placed slightly below this wick. 20 pips as such. 1:2 is okay. You don't target much, just 1:2. And just like that, NFP came. So then I was in the trade for a while. And boom. That was how I got that particular 1.9% on this particular win. So as you can see from here, this is what I call advanced self-review. If you want to always review yourself, this is the trade. As you can see, stop loss below there, and my trades actually got hit. TP got hit on this one, and I took a screenshot. I didn't leave it there. I took a screenshot because it's always wonderful when you have a trade that plays out for you, and you can see the after trade is here. If you check it out, to this after trade, exactly where I stopped. Exactly where I stopped. You can see that. And price then begin to do its thing. I didn't trade again. It was Friday. Let price do its thing. I didn't actually take any position. I was there for the whole week. Just let price do its thing. This is 6. I'm out of the markets. I'm relaxing. So if I had actually taken all the trades last week, I should have actually been a gentleman sitting right here with my spectacles, maybe taking some nice taking some nice drinks, not alcohol by the way. So yeah, so that's actually how I go about my trades. This is a very wonderful backtesting session. Please do make sure to go through it. This is a full gem inside of this. I think I'll be arrested for doing all this, and backtesting sessions on something that's a lot of people underrate, but they carry a whole lot of weight. All right, in the market there is a lot of weight on backtesting sessions, so I will make sure to leave it here. And this is how I went about my day last week. So yeah, let's appreciate the time and concern. This week I didn't take any trade, I didn't take any position. Let's play it back to this week. Let me just close. I didn't take any position this week on my accounts because I didn't get what I wanted. And so yeah, I will still be back testing to see if there is any mistakes that I should have corrected to get a trade here. But if there is nothing, I think I'll just pass, and then I'll wait for myself to actually get good positions. So without further ado, let's have it.